So I want to show you now talking a little bit about cycle analysis for the NASDAQ, all right? So what we have here is the NASDAQ. This has been an amazing rally, absolutely amazing rally. The reason why bulls are so confident in this rally is because it is the longest bear market. If it's a bear market, it would be the longest bear market rally in history, right? So epic move to the upside here, longest period. But what I have a concern about is this, is that you basically have a cataclysmic event brewing where you have the fastest rate hike cycle in history, and now you have the longest potential bear market rally or maybe bull market beginning as well. And so they both can't be right. You either have interest rates that are going to eventually cause this to roll over, or you have a new bull market that's going to come up to double top, maybe pull back, and then break to the upside. So which one is it? Well, what I love to do is I love to look at the charts. And the charts, they're just very simple. It is what it is on the chart. And as a chart reader, that's what we have to do. So as long as we're below this pivot high, that pivot high is the dominant pivot point on the chart. It is the highest point. As long as we are below it, you have to respect that high. Now, if we flip back to past cycles, all right, so let's go back to the past cycles. Let's go back to, which one is this one? 2007. So in this situation, here was your dominant high. We pulled back, we had a big dump, and then look at this. This kind of chop action before the big dump out into the lows of 2009, essentially the end of the bear market, culminated with this flush out here. By the way, we haven't seen that type of flush in this market yet, just a heads up on that. But notice this price action. Notice the down, bounce, pullback, bounce, and then go to the current cycle, down, bounce, down, and then kind of bounce up. It's very similar. It's very similar as people are lulled into this false sense of confidence that this is a new bull market. All right, so again, if we flip back to that one, we can see down here and then kind of this same sort of U-shape or hook shape in the market that we had that we currently have. Now, if we go back even further, take a look at this, guys. This is the 2000 tech bubble. Here we have a cataclysmic rise, and I think this is very useful because if you look back at the current cycle, right, cataclysmic rise, right? Cataclysmic rise, very similar to 2000 with the dot-com bubble collapsing. If we flip back to 2000, sharp decline, and then look at the same U-shape, the same U-shape. Now again, the bulls will tell you, and they could be right, listen, anything is possible, right? Everything I do is probability based. There's never 100% of anything. So there's always a chance that the bulls could be right. This is a new bull market. But again, for me, that's your dominant high. And again, yes, were there people saying this was a new bull market here? Here, absolutely there were. And what we know is that in the tech bubble, it continued to collapse into '01 and even into '02. So again, my point here is just to show the similarities from past big cycles in the NASDAQ to make sure that people at least are informed. You don't have to listen to what I say. You do what you want. You got to make your own decisions. That's what this is all about. But I want you to understand when you're hearing the mainstream media and all these economists talking about bullishness and this is a new bull market and everything's going to be fine and it's going to be a perfect landing, you have to understand past cycles and how they worked out.